Afternoon, everybody. This is Chrisi from Solstice ATR and Vulcan Capital Research. What I'm going to do today is basically take a review of the overall what the market has done prior year and what the outlook is for 2020. I am not doing any prediction, but I want you to trade what we see, not what we think. Happy New Year to everyone. Look forward to seeing you at our Solstice ATR or Vulcan ATR. We're here to help you and do our best to make sure you are on the right track and the right side of the trade at all times. I first want to start by taking a look at the almost major indicators in the market. First of all, I'm starting with the 20-year Dow Jones Industrial Average. And as we noticed from 2009, we have been going uphill. Basically, we had a little bit of turbulence last year and we rallied back up and we ended up, in the S&P 500 around 29%. I mean, is that a good rate of return? Of course it is. Everybody wanted the market to crash, but unfortunately the Federal Reserve Board has been able to keep the market, elevated due to keeping the interest rates low and putting more money to work in the market from the fear gauge that's happening globally. So far, if we take a look at the Dow Jones Industrial Average from 2016, even if I take just a channel from here, I connect this nearest low to this nearest high. We are in an up channel and we are on the monthly chart away from the 20 SMA, 18 SMA, and the 50 SMA. If we end up falling below the 26,750 area, we have to watch. It may turn to the other side and eventually come back to this side of the channel. This is, usually we have a couple of 100 points away on the NASDAQ. On the Dow, we usually have a little bit more, but that's your 18 SMA. This is where the range we need to keep an eye on, 25,750. Worst scenario, we can get back to the 24.8 and continue higher. I am not saying we can go down. All I'm saying just what the technicals do. Are we extended? Maybe, maybe not. We can still continue higher with that, getting a small relief back. Watch the first 5 days of the year in the market, which is tomorrow, Thursday and Friday, and next week on Monday, Tuesday, and Wednesday. That would set the tone for the overall market for January and the following year, just letting you know that. That's what I'm looking at, the Dow Jones Industrial Average. Let's now go to the NASDAQ/NDX. Oops, NDX, I'm sorry, NDX. It's taking a little bit of time. I'm not sure if they're doing any updates, TOS platform, which is TD Ameritrade or Thinkorswim. It should come up. There we go. Similar situation. Well, I mean, we can see it from, 2009, we're still upstreaming. And the computer from 2016, look what it did nicely on the NASDAQ. It gave us a cone up channel and a down channel. We're still above, the 2800, as well as, being above the 78,700, 675. We're still going to be bullish. This is the monthly chart. Keep an eye what the technicals are. Are we extended from this channel? If we grab a pointer here and we connect these two dots that we had from prior, we're a little bit, pushed a little higher. Can we continue a little bit more? Of course we can. Just make sure we trade what we see. That's the NASDAQ. Let's take a look at the Russell. RUT. That's the small cap. I consider the small cap to be the canary in the coal mine. I always will say that because it is the first one that will move up and the first one to move down. So far, we have been, range bound, trying to break out of that flag and that down move that we had beginning of the year. The Russell's trying to do still catch up, but eventually if the Russell cannot continue and we can go back till 2016, if we look at from 2009 till 2016 and we connect this line, we are in an upslope. And what I'll do, I'll just connect those three and I'll show you the faster time frame as well. This is one connection. Now if I grab the 16, was the low here. We're still in a symmetrical triangle, and eventually we broke out of there in 2016. I mean, in 2019 on Russell, and we're trying to continue to clear this bar. Have we finished, that 1700 area? No, we're getting close to it. But in case we do not, continue to the upside and we come back in, the Russell has to stay on the monthly above 1515. But if it comes back in the 1650, 1620, watch the Russell for the first, indication if there's a change in trend. And what I'll do, I'll go from the monthly just to the daily to show you how it looks like, so you can see that. Still taking its time. I'm not sure why TOS is taking it slow when it's trying to reload back the charts, looking at a, annual chart. And if you notice, we had these three tops and eventually we broke up. We had a little bit of reset on the holidays, and Friday was Thursday, Wednesday was down day, Then we had a Friday up move in Russell. So if I look at it on the daily and go back just to the weekly, you can see that move is basically back up in the Russell. I'm not sure why it's taking so long to get this put together. There it is. You can see the breakout, and they're trying to get to this upside here where we fell from. If we can get back up in this area, that would be great in the Russell. Let's now go back to the ES or the SPX. And I'm going to put the 20-year chart as well on the SPX and zoom it in time frame. We're going to go from 3 years, 20 years, and go push OK. Still waiting for it to load. I'm not sure why it's doing this. I should be, patient with it. So remember this here for 2020, don't set anything up that you cannot accomplish. And if we can look from 2009 and up, the S&P continued. I mean, I put it on a weekly, should have put it on a monthly, my fault. Just go weekly. Instead of, the 4 weeks, I made it into a week instead of a month. Okay, here we go. Push OK. So from 2009 till 2016, we still have that down channel. We can connect it. We got two, and I actually put one earlier on there. And I'm going to start from 2016 and up. If you notice, we're still in an up channel. We broke the prior channel up. I have a steeper, sharper, line going up on the annual chart. If I go now to from a monthly to a weekly chart on a 3 year, we can see that it's still bullish, the S&P, as long as we can clear the Thursday prior high from the last week where the Christmas holiday happened and we came back from Christmas. We had a prior high on Thursday and we couldn't look back, then we fell down further down on that day. So it kind of gives us an idea we're still in an uptrend. Is these two up channels. We broke above them. This is week 1, week 2, week 3, end of the year. We couldn't finish that 47 area, 48. We went down and looked in the 32, 13 area, 32.15 area, and we rallied back up to close in the SPX at the 32.30. On the ES, we closed around the 32.35 area. So let's just come down to the daily chart to show you how it looks like, and we'll go from there. On the S&P, this is the daily. I'm going to keep the ES till last. I want to go over gold, silver, the banking sector, the biotech, so that way we can get a better idea, the technology, the semiconductor, consumer products. That way we can, the transportation industry, so we can see a little bit more what's going on in the global markets as a whole and what's happening throughout the year. Remember, if we come back from beginning of the year where we started the rally in November, we started down here and we took off in November. We had that push down and we came back up. We got about 11 pucks holding. I mean, have never been revisited. We got a lot of gaps in the ES. We have to make sure that in order for us to continue, because this was a side action at Christmas, we pushed up. End of the year, we pulled back in on the daily. On Friday, we pushed back up. We filled partial gap at this one. This high was 32.0550, and this one, the low was 32. The low was 32.1203. We filled the gap. We didn't fill 100% of it, and we U-turned and went back up to be a positive day on the SP. Let's take a look at SPX. Let's go look at GC, which is gold. I'm going to show you the daily chart first and go to the weekly. I like that breakout in gold. We called it about a week and a half ago in the video before the holiday. I said, hey, keep an eye on gold. It's going to move up. And this is what it did throughout that move. We had that flag. I had that little cone in here and I had this channel. Eventually we kept touching it once, twice, or let's call it 2, 3, 4 times. Fifth one took off and went higher and it continued. We have to keep an eye. If the reset is shallow, anything, do not short gold. If the resets are shallow in gold, it's buyable position, so we can go back to the prior high, and I still have this oval up here on gold. If I look at it on the weekly, you'll be able to see it, and this is why I like gold for the long-term swing trade. To the long side, try not to short it, try to look for, because it can go against you very sharply, gold, because you got the overnight action in it. I don't want you to trade in the overnight. Try to find positions during the day, on resets in order to buy it and swing it, unless you want to do, some kind of a butterfly or a in order to own it and go higher if you expect it, to continue to up here. This is why I look at gold. It's in an up channel. We were in a symmetrical triangle and eventually we broke out. Let's take a look at the oil CL. I'm going to go from the weekly to the monthly to show you the overall. The oil has been in a symmetrical triangle range bound between the $52 and let's call it the $60 range. Right now, if oil can get above that 61, 62 area, it can rally up to the 68. If it pulls back underneath the 50, it can fall back further down. And what I want you to do, if you notice this high here, you connect it to here. We broke up, we barely breaking up, but if I connect this one to upside, we are in a symmetrical triangle, plus we are in an open cone looking to the upside on oil. So if I go to the monthly chart, you can see it a little bit more clearly, which I'm going to clean some of those, channels that I have on it. I never took them off. So let's go for a 15-year. Instead of weekly, we go to the monthly. And we're going to push OK. And I'm going to clean some of those wedges out and channels that I have on it, so you guys going to get a better, clear picture of oil. Oil has been range bound. I wanted it to be in the $68 range for the 2019. Unfortunately, it never broke out of there. It kept fluctuating back and forth. I mean, you can take a look, this channel from up here down to here, you're in a down channel. And if you take this bottom here to this channel here, we are in a symmetrical triangle. Either it has to break to get to the 68, or it has to break down, come back to this channel in the $50, $48 range. All the other ones around it is basically giving us an idea where the channels can be and what oil can do in the overall. I'd like to see oil in the higher pricing area. I'm not saying to be bullish. This is my opinion. This is what I'd like. I'd like to see oil at a higher price. At this point, it hasn't broken out of there yet, but I'd like to see it, break out and continue higher. So if I connect it to this one, you can see it's got a little bit more leg room. And if I go to the weekly chart, you'll see that one more time. Let's just show it. So we have a symmetrical triangle. It's taking slow. I don't know why Toss is doing this today. You can take this one out of here because it's already broke it. You see it here. We have this channel. We can take that one out. And we'll keep the other two up channels, going higher because you can see I have two of them here that are a little bit sharper. I would like to see oil eventually clear that 63.75 to continue to the upside here. If oil, it's in the middle of these two cones, if it cannot continue and falls back in, it can come back to the backside of this small channel and the other one down here. So it's being range bound between the 62 and the 52 area since, if you look at it, since December of last year when we started in January. You can see that candle was in the $50 range and as high as 62, 65, and we kept chopping back and forth, range bound in oil. If the oil going to continue, it's going to go up to this channel. If oil falls, it goes back to the backside of this channel. Let's take a look at the transportation, dollar sign DJT. I don't know if something is going on with the internet or TOS platform. If you notice, the transportation on a 3 year has been range bound back and forth. The highs of the 11,200 area and the low of 10,200 area. I would like this, if transportation going to continue, I would like to see that formation of that roundness here and continue to break up to this area where we can get three tops. If it cannot do that, you got those two little tops. Let's call this 1, 2, 3 on it. It may, come back in. So keep an eye on the transportation. I'm going to look at the airline. Another instrument to look at the airlines is basically in I believe it's XAL. Oops, XAL. Okay, XAL in a similar situation, you can see this stop here, this stop here, this stop here. It's in an open column, it's in an up channel trying to break, these areas trying to head higher. But unfortunately, in this area is the consolidation of the prior high. We look down, we double. I mean, you can see it's an uptrend. You got a sharper stick. If we can form a cup and handle and continue high because it's got these three little tops, it can move a little bit more higher. So let's see if oil and transportation as well as airlines can make a change in that sector because it's being range bound, most of them in that area. Let's take a look at the bank BKX or BANK, and you got the broker dealer, which is the XBD. I'm just going through them very fast so that way you guys can see them. If you notice the XBD, the bank index, it's making that round trying to reach the prior high. If it can, it doesn't have much room to go in that sector. And if you look at the bank, I mean, it's a little bit toppy as well, or the broker dealers. If you notice, the bank was range bound and eventually we pushed higher above this symmetrical and we have down channel here. We broke out of that triangle. If you connect this dot to here, to this one, come on. There we go. We just finally, broke that wedge triangle and pushing up to the prior high. That's the bank. If you look at the XBD, that's the broker dealer side. Like Goldman Sachs, BlackRock, JP Morgan, or if you look at the bank, Chase Bank, Wells Fargo, Bank of America. So, I mean, these are the things like Boeing Airlines, Lockheed Martin, American United, American airlines. These are the things I'm trying to show you. Look at the different sectors which are moving up or down in the direction of the moves, so you don't end up to be biased. If you look at the broker dealer, similar situation is at the high. If we end up losing the 285, it's on the other side of the fence as well. Let's take a look at the semiconductor industry. It's SOX. We haven't looked at the biotech yet either. The semiconductor consists of, all those instruments in the tech sector. I'm not talking about the fins. I'm talking about the major, sector in the technology that creates software, that creates, chip manufacturing, conductors and all that kind of stuff. If you look at the semiconductor, it's been so bullish and it just took off. I mean, it's very healthy. It's away from the 18 SMA on the monthly or the weekly chart. Is it a little bit extended? Yes. Can it continue higher? May. I mean, if you look at from 2019, look what it's done. It's reset, continued, reset, continued, reset, continued, reset, continued. If we can get a reset here, it's an opportunity for a buy in the semiconductor unless the market goes south. Let's take a look at the utility UTY. I know I'm quiet in between those when the charts are trying to load. I have no idea why it's doing that. If you notice, yeah, I mean we are in continuation in an uptrend on the weekly chart. This is forming like a cup. If it can come back in and continue higher, that would be great. If not, that's fine. Utilities, I see it right now range bound. We would like to see a reset before continuing higher. And last but not least, let's go to the ES and break it down. If you notice, the ES since 2019, it continued higher. We had a couple of, little resets, and we have a very sharp incline in the S&P 500. The volume has died out in the last couple of weeks. Is there volume coming back in the first week or second week of January? Keep an eye what the institutions do in order to keep us up or bring us back. The first 5 days of the year are going to be very critical, which is Thursday, Friday, Monday, Tuesday, Wednesday. I will repeat myself. Keep an eye on which side, how the market acts in that week for the coming month in January in order to put an overall trend on the market. And remember, I'm not biased to being to one side. I trade what we see, not what we think. We are technical traders. And what I want you always to remember, trade supply and demand zones and momentum. Don't trade side markets because you will get chopped up. If we look at it on the daily, since the beginning of November going higher, we got 6 gaps. We got 1, 2, 3, 4, 5, 6. This is a partial gap fill. We didn't fill all of it. If I go to the overnight, if I go to style in the setting, I go in the setting and I remove the overnight action, it will show us the gaps. So, and I push apply, and this is the reason why I'm showing you, and I'm going to use the volume profile in order for you guys to understand why I want to look at the volume profile to give you an overall where the value area highs are, where the value areas low are, and where the gaps are. Usually where there are gaps, we go through them very fast. Where there's more volume, there's more opportunity for us to find in the trading market. Let's go down here from November. If you notice, there's a gap here, there's a gap here, there's a gap here. I highlighted them on purpose. That way we can see what's going on in the first week of January throughout the coming through the coming weeks. We filled up partially here. If you notice the low on this candle, that was the 32.13, and the high of this candle was 32.12 and a quarter. Did we almost get it? Yes, but since that gap is still not filled, the institutions or the individual people saw that there is still value in the price. They didn't fill it and they pushed it back higher. That means they are still bullish on the market unless the trend does change and volume picks up to the other side. So the momentum you turned on Friday from that low and continued higher because we got two poor highs at the high. In the overnight action, we had 32.51, 54, I should say. This was the price in the trading hours was 51. If I go to the daily and I go back and put the overnight session on, I go back futures and I show overnight action and I highlight it, it's going to tell me that the high was higher. We were not able to fix that poor high up there. We need to fix that poor high, and I'll show you why I'm talking about. Wait for it to load. Okay. If you noticed, the overnight was 54. Without the overnight was 51. Do we need to fix it? Yes. Does it have to be fixed? No. Because this was the price action that we went when we looked up, and then we couldn't look above the 47, 48 area on this candle. On Thursday, we looked into the POC, missed the POC by a hairline. We had 32.44 and we came back down. Then we pushed up again, and this is in the after hour sessions that was traded on 1-2 overseas. If you notice, the market is open. The high was 32.40.75 and the low was 32.34 quarter. Can we continue and go higher? Possibility. Can we come back? Possibility. So what I'm going to do, go from the daily to a 20-day, 78-minute, and I'm going to go use the monkey bars to show you what I'm looking at. Oh, the volume profile. We can use the volume profile on TOS. I can do the same thing. Let's just go to the TOS platform. I'm waiting for it to load up. And you put in here volume profile. And the TOS has one already built in. We zoom down here. We open the volume profile. Instead of minutes here, we go to daily. And instead of extended, we go, instead of extension, says no, we're going to go extension to the right side. We'll push OK, then we apply it. There it is. There it is, okay. If you noticed, the volume profile from high to low has a puck area in this area. This is where the most volume is. Where there's little volume, you see those little gaps in here. This is the low volume. Is it possible we're going to fill, because when we come back through, we're going to look for where most volume profile is. The 32, 29 area, 26 area has been very supportive in the volume profile on ES. If we're going to fall through this area, because you know that was a partial gap, I think it's still bullish because that's the overnight action. If I take the overnight action out one more time, let's just go to style in the setting. I'm going to take the overnight action off to show you that the volume profile, how it looks like without having the overnight action on, okay? Apply, and we'll see a little bit more those gaps and how the volume will act. If you noticed where most volume is, because I took the overnight off, this was another POC. This is the higher POC. This is where it's a poor high, that 54. We had 51 here. We need to fix it. We're above the 50 and the 18. We pushed on Friday back up. As long as we don't fall below the 32.13, fill that gap in 3205, 3200, we're going to still be bullish. That's the other gap here. There's another gap here. You see it in the volume profile. There's another one here. These are where major volume is, the spikes, when you have one like this, you have one here. That's where the major levels are. You usually get a bounce on them. And the ones that don't have any volume profile, you usually run through them and come back up. Okay, so we're always going to look where the volume profile, where the high peaks are and the non-peaks are. It's going to give us an idea where that volume profile is in relationship to the price action that's happening in the market. If there's anything we can do to help you at Solstice ATR or Vulcan ATR, please look us up. We're here to help you, give you the best ideas and best possibility trades in the market. We can help you educational wise, understanding market trend, volatility, and which way the market would be heading. So as far as we are still bullish, keep an eye on that 29 and 13 area. If we fall through it, the 3202, then this gap here and this minor channel down here would be around, the 3200 area. If we fall back down, the major value area low is the 3138 area. That's the value area low. POC value area high, which is up here. We still need to fix. So far, the momentum is still bullish. Let's see what Thursday, Friday holds for us, then Monday, Tuesday, Wednesday of next week. And we're here to help you the best way we can. Take care. Over and out.